Hey folks, CA Rachana Ranade here, and I welcome you all to a very interesting IPO summary video of Rajputana Stainless Limited. The intent of this video is to summarize a 500 pager plus RHP into a roughly 10 to 15 minutes video. You know, the history of this company is pretty interesting. The company was initially established in 1991 and managed by the then promoters Ram Saran Thambi and Om Prakash Agarwal. The present leadership and primary promoters are Shankarlal Mehta, Babulal Mehta, Jayesh Pitwa, and Yash Kumar Mehta. In 1999, the company was classified as a non-BIFR SIC industrial unit due to financial distress following a default on a cash credit facility. Between 1999 and 2000, current promoters Shankarlal Mehta and Babulal Mehta joined the board and initiated several revival measures. Their efforts led to a complete turnaround, and the company was removed from the list of SIC units back in 2006. Now, on June 1st, 2007, it was converted into a public limited company and renamed as Rajputana Steel Castings Limited. And the name was further changed to its current form, Rajputana Stainless Limited, on July 12th, 2007. Well, I hope you have understood how the history of the company panned out. In the next section, we talk about what does the company do. Rajputana Stainless Limited is an Indian manufacturer of long and flat stainless steel products, and they sell their products under the brand name RSL. Now let's try and understand what is their core product range. Company manufactures something like billets, forging ingots, rolled black bars, rolled bright bars, and flat and putty products. They offer these in over 80 diverse grades of stainless steel to meet very technical and application specific requirements. Now let's also understand their primary business model. They operate on a B2B basis, and their customer base primarily is composed of manufacturers and traders, right? Now that we understand that it's a B2B business model, also let's try and understand what could be the end use industries. Okay, so their products are utilized across multiple sectors, which could include something like automotive or forging, engineering, utensils manufacturing, fasteners, and even seamless pipe manufacturing. Company also received an accreditation from TUV India Private Limited with AS 9100D certification for the manufacture of stainless steel ingots, billets, and round bars for aerospace application. Now let's understand about their manufacturing infrastructure. The company operates an entire integrated facility in Panchmahal, Gujarat, which covers a production chain right from melting and refining to rolling, treatment, and testing as well. Now, talking about their market presence, while predominantly they are focused on Indian domestic market, which accounts for over 99% of the revenue in the most recent periods, they also export to 9 countries, including US, UAE, and Turkey. If I were to understand a bit more about their strategic expansion, RSL is currently working to diversify its portfolio through forward integration by establishing a manufacturing unit for stainless steel seamless pipes within its existing facility. The company has also set up a captive solar plant and windmills with an aggregate installed capacity of 7.2 megawatts as of September 30th, 2025, which enables the company to reduce its operating costs. Now let's understand about the overall segmental revenue. First, we'll understand based on the geographies, and then we'll understand based on the business. Talking about the segment revenue based on geography, you can see our domestic revenue accounts for 99.94% of the revenue. This is as at 30th September 2025. And if I'm talking about export revenue, that's 0.06% again as at September 2025. Now this is at an overall domestic versus export. But what about state level split? Now you can see our entire state level split also has been given in the RHP. Maharashtra accounts for 47.79%, Gujarat accounts for 35.06%, Uttar Pradesh accounts for 8.24%. So, all in all, you can see that these are the 3 important states for this company. These 3 states together account for roughly 90% of their total revenue. Now, if I were to understand about the business as well, I just now told you that their overall business products are also pretty much diversified, be it billets, forging ingots, rolled black bars, rolled bright bars, flat and putty, wire rods, other products, and other operating revenue as well. But from that entire thing, I've also marked this for you. Rolled black bars account for 57.57% of their total revenue. So, if you've understood the overall revenue, the geographic and the business split, in the next section, we'll understand about the industry analysis. Now, if I were to understand India's position in this sector, India is the second largest consumer and third largest producer of stainless steel globally, with an estimated installed capacity of 6.6 to 6.8 million tons. Now, this is the current estimated installed capacity, right? But what about the consumption? Current consumption for FY25 is estimated at 4.8 million tons, and it's estimated or it is projected to reach 5.5 million tons by 2030, which comes out to a CAGR of roughly 6.59%. And if I were to understand the consumption pattern by 2047, it is visioned to reach 20 MTPA. Again, that will roughly come up with a similar CAGR, right? But right now we said that okay, India is the third largest producer. Who could be the first? I'm sure everyone would have guessed it by now. It is China. But you know how much is the gap for that? Have a look at this. Now, if I were to even understand the latest data again, as per RHP, it is as at 2024, and you can see that India's crude global crude steel production 7.9%, whereas for China it is 53.3%. So even if we dream to be like the biggest producer in the world, I'm sure you have understood visually itself that how much more gap we have to fill up. Now let's understand about the financials of the company. If I'm talking about revenue from operations, there is a slight degrowth, and you can see here from 23 to 25, the CAGR for these years has been negative 0.82%. But one point is that they have at least consistently clocked 900 crore plus revenue, right? Talking about EBITDA, the CAGR for 23 to 25 has been at 29.94%. And if I'm talking about PBT has had a CAGR of 38.27%. Now let's also understand a little bit about their key performance indicators. Now if you see your EBITDA margin, it has been continuously growing, and as at 30th September 2025, it stands at 9.16%. Same about net profit margin, it has been increasing, currently stands as at 30th September stands at 4.87%. Talking about ROCE, ROE, if you have been following my channel since a long time, I always say that 15% is a good benchmark to have for ROCE and ROE, and both are almost fulfilled. If I'm talking about debt to equity ratio, again, if you have been following my channel, you know lower the better. High on a higher side, it could be 2:1. But if you see here, it has been continuously decreasing. And when you understand why the company is coming up with an IPO, one of the reasons for fresh issue, you can also link to the debt to equity ratio when we talk about that later, right? Now let's understand about few key risks of the company. What they have mentioned in their RHP is we derive a significant portion of our revenue from operations from our top 10 customers, and we do not have long-term contracts with all of these customers. That's the first risk that they have mentioned in their RHP. Second, I think we have already talked about this, that the majority of the sales from the domestic markets comes from three states, which is Maharashtra, Gujarat, and Uttar Pradesh. And they mentioned that significant portion of their domestic sales is derived from these three states only. The third risk is about how much contingent liabilities they have, and they have very clearly mentioned this in their RHP that if these contingent liabilities materialize, any of these contingent liabilities materialize, then their financial condition could get adversely affected. Now, these are few key risks which they have mentioned in their RHP. Let's now move on with the valuation. And for valuation, they have very clearly given which are their listed peers. But for PE, they have mentioned which is the highest, which is the lowest. Highest being Panchamahal Steel Limited with an with a PE of 182.18, lowest Electrotherm Limited with a PE of 3.16, and average comes out to 58.56. Now, if I were to talk about Rajputana Stainless Limited's PE, their pre-IPO PE will come up to 21.1, and post-IPO will come to 20.88. In the final section, we'll understand about the IPO details of the company. IPO opens on the 9th of March, that is Monday, closes on 11th of March. Price band is 116 to 122 per share. Now, if you look at the total issue size, it's just 254.98 crores, and majority of it is fresh issue of 178.73 crores. But what is the company going to do with this money that they receive? 18.57 crore rupees is going to be used for funding capex requirements for expansion of their existing manufacturing facility at Panchamahal in Gujarat. And the second one, which is almost 98 crore rupees, that is going to be used for full or part repayment or prepayment of certain outstanding borrowings which the company has availed. If you remember, in the previous section, I told you about their debt to equity ratio, which was anyways falling. And if they are going to use 98 crores for the repayment, prepayment of loan, ideally their debt to equity ratio should fall further. I hope you enjoyed this short and sweet summary of Rajputana Steel IPO. If you did like this video, please don't forget to smash the like button. Please don't forget to subscribe to our channel if you have still not subscribed. Don't forget to share this video with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.